Alright, let's start off with a quick quiz. Looking at the chart right in front of you, is the market bullish or bearish? I.e., is the market healthy and strong, or does it look weak to you? So take a look at this chart based on everything that we've explained, and what do you think? Does this market look good or does it look bad? Alright, now that you've thought about it a bit, let me tell you the answer. If you said that the market looks bad, that it's bearish, or that things look not very good, that's the wrong answer. But don't be too upset. If you also said that the markets were good, that it's bullish, that's also the wrong answer. So what am I talking about here? They're both the wrong answer. Well, the right answer is on which time frame. That's the right answer. The right answer answers with a question. On which time frame are you asking? Because if I'm looking at a small time frame over the next 2 or 3 days, this was June 20th of 2012 to June 25th here. This is a down move. Sure, that looks bearish. That's a down move, right? But what if we zoomed out and saw what is the context of this down move? And so here we are zoomed out. The context of this down move from the preceding market action on a bigger time frame is that this was a normal pullback within an up move. Okay, this was an up move. It was trending up here, it balanced here, and then it trended up even higher, right? And this, even though it was going down, was simply a down move within the context of this overall up move. And this down move came and basically retested a previous place. And so if you were just looking at that without looking at the bigger picture, without looking at a different time frame, you might have thought, oh, this thing's going down, for sure. But if you look at this bigger picture of there was an up move and now this is just a normal pullback, once you go even further out, here's what happened. This was the day that I was asking about here. This was the down move. Well, what it did was it tested this again, went up a bit, and then bam, it shot up. So if you were just looking at this down move thinking this looks all bad, you were missing the point here. Sure, it looked bad in these 3 or 4 days, but what is the bigger picture? And this is what this whole session about, is to teach you to look at multiple time frames and to look at things from not just the level where you are, but from the bigger picture all the way down. And the way we do this is through something called a top-down approach. When I'm analyzing any market that I'm trading, right? What I do, I don't start at this smallest level like I asked you here. That was a trick question. What I do is I start at the biggest picture and then I drill down. That's why it's a top-down approach. You start at the broad and you drill down. So let's analyze this market, all right? And let's take a look at it and see what we can come up with through a bigger picture approach. So let's zoom out. The process you start to analyze where any given market is and what it's likely to do is to start at the bigger picture. So if you're day trading, that means zoom out from these tiny little days and go out to the bigger daily picture. So on your chart, you choose the daily time frame. Right now, this is a 30-minute chart, which means every bar is 30 minutes. So now I want to go out and choose daily on my time frame. Alright, and now we have the daily chart up. So, in the context of the daily chart, we see we're here at the right edge of the chart, okay? And we see that this market has been generally trending up for quite a while, since the beginning of 2009, and now we're near the end of 2012 as this training is being filmed. So you're talking about a 3-year up move, okay? But what else can this picture tell us of the bigger context? Well, if we move it back a bit, we notice that before this big up move, there was the very much infamous collapse of 2008, where we topped out here around 1500 in the S&P, and we went on to go down and basically crash all the way to 600 from a high of above 1500. Well, on the bigger picture context, this has been a major up move since 2009, but it's really just getting to a point where it retests that previous high of 2008 before this major crash. So now we have this kind of bigger picture. We had a major top in 2007, went all the way down, we bottomed out in 2009, and then all the way back up now towards the previous highs of the late 2007. Okay, so now we have this broad picture. Now we want to go in a little more to be able to trade the recent market action. All right. So the one thing we know, forget about the previous decline of 2007, 2008 for now. The one thing we know is that currently we're still in what's called an uptrend. All right. And so we know that in terms of the bigger picture, it's a healthy market for the S&P 500 as it currently stands. Now, what does that mean for, trading the next few days? Let's say the next day if you're a day trader, or the next several days if you're a swing trader. Well, now we narrow it down. We have the big picture. Now let's go even closer. So let's take it from a daily chart and let's go to, let's say, a 60-minute chart. All right. So you would choose 60-minute on your time period. So here is our 60-minute chart. And now once again, when we look at this, we see that it's also healthy in this time frame, which shows us about 4 months back. In this instance, we see that it's still an uptrend, higher highs and higher lows as the market grinds its way higher and higher and higher, right? And so this is also bullish. It's a strong market. And so we drill down even further. Let's go down now to about a 15-minute time frame. And here we are at a 15-minute time frame. And again, it's bullish. What you have is you had a major trading range here, or a balance area, right? This was where trade was taking place. It was all in this one area. And then a major move broke out of it. Buyers rejected this area. They found that value, or they perceived that value should be higher, and they were much more aggressive than the sellers, took the price up, found a new value area here where them and sellers at that point were agreeing on price again, right? And they were balanced. And then once again, they shot it up, and there was a reason for them to believe that value is higher. Okay? And now we're at a point where we're here, we're pulling down. So now let's go again one step closer. We zoom in once again to understand what's happening. And so now we're at a 5-minute chart. And the 5-minute chart showed after this large up move to break out of this balance area, the market found a stopping point here where sellers became responsive. They felt that the price had gone too high. They started selling. Now there was not enough buyers to meet this supply of sellers coming in, and the market moved down. And so let's now go one step even further in, and let's go to a 1-minute chart. And so here we are at a 1-minute chart. Now, if like most traders you started here, right? And this is the current day where we're trading, this is the previous day, and this is the day before that, okay? If you were like most traders and you saw this might look like a very bad market. Everything's just going down, straight from here, down, down, and down. So you would be thinking, wow, this market is pretty terrible. But if you were looking at a top-down approach from different time frames, like we just went through this process, starting at the daily, then the 60-minute, 15, 5, and then 1, you have noticed that it's all bullish, right? You've noticed that the major trend of the market daily is up, the 60-minute is up, so is the 15-minute, and the 5-minute was just starting to find a balance area. So in that context, all this down movement means is not bearish. In the context, this is a chance to find an opportunity to buy, right? And you would be starting to look at a place where you would be able to buy. Now, in this module, we're not talking about actual trade strategy and trade tactics to know where to buy, but the idea is this allows you to interpret the market better, to then use those strategies and tactics correctly, to know if you should be buying or selling, which is the key question. All right? And this top-down approach allows you to do that. Now, in this instance, all the trends were lining up. From the biggest time frame down to the 5-minute one, they were all good. The 1-minute one is down, right? Which shows you in the intermediate action, market was going down. But looking at it on a bigger picture, this was all bullish.